Lars, Machenil, thank you so much for being with Bloomberg TV today. So in the first quarter, you had revenue growth plus 8.6%. Your net income was at 1.77 billion euros, actually beating Bloomberg's estimates. Could you tell us about your achievements and concerns in this first quarter?
Sure, it's always a pleasure to talk about the results. In particular, if you look at the first quarter results for BNP Paribas, they were very solid. As you said, the bottom line up 38%, and that basically reflects the recuperation, the gradual recuperation of the economy, and moreover, it's a tribute to the adaptability of our employees and of our clients. And if you take a look at it, just to mention it, we have done for more than 100 billion euros in financing in that first quarter, which is levels which is better than 2020 and even better than 2019. So that's a bit what we see. And indeed, if you look at the elements of the P&L, you see the top line up basically almost 9%. If you look at the cost, we have operating jaws in each of the divisions. If you look at the cost of risk lower in each of the divisions, and at basically 42 basis points over outstanding, so very low. So if you take all this, you basically get a bottom line, which is very strong, 1.8 billion euros and up 38%. And on top of that, let's not forget, this is realized by a bank which is very stable, therefore with a common equity Tier 1 of 12.8%. And let's not forget 12.8% takes into account 50% of earnings being paid in dividends.
However, if we looked at the fixed income, FIC revenues were actually down 15.7%. You had a less favorable environment. Could you tell us about this? Is this some kind of normalization?
Well, if you wish, as you know, we are a very diversified bank, yeah? And therefore, instead of looking at one specific product, look at our CIB, which is helping by lending or by financial structuring or by capital. And if you look at our CIB, as I said, it's almost up 25%. And then if you look at the domains, corporate banking up, our global markets also up. So it's a bit, you have some trends. And indeed, if you look back in 2020, there was a very strong effect when it comes to rates, which is now a bit normalized, but still the levels are very high. If you compare it to 2019, levels are 11% up. So we're very solid, very with what the client needs.
Still, do you think there is some kind of normalization of trading? Do you expect the level of activity to taper off in the second half?
But if you look at it versus the normal rhythm, because there can always be spectacular events like what we had last year. But if you look at the normal levels, we are stronger than what we had in 2019. And that is what we saw in the first quarter. Listen, I don't have a crystal ball about to say what the second quarter is, but you see a solid demand. We have been taking market share, and so we are very well positioned to serve our clients.
Let's talk a little bit about what happened in the banking sector with Archegos fallout. Your exposure comes from the hedge funds business you got from Deutsche Bank back in 2019. Deutsche Bank did say this week that they managed to exit the position without losses. Yet, are you still putting into question the transfer of assets, which is still ongoing by the end of this year?
No, the transfer is ongoing. Let's not forget. Basically, it is foreseen that by the end of the year, these activities and the people will be transferred to us. And so at this stage, as long as they aren't transferred, it's basically managed, and the risk is basically managed by Deutsche Bank, which they have done very well.
So does that mean you're not going to have any exposure from this Archegos fallout?
Listen, all of the transfers have to go through our KYC and all of our compliance acceptance kind of processes. So that's basically it. So it's not a concern. It will basically be the transfer will be done in line with what we accept our clients. But once again, I mean, as you saw the results of Deutsche Bank, there was not a concern.
Yet are you scrutinizing the books a little more before this finalization of the transfer of assets? And are you committed to this prime brokerage business in the longer term?
Absolutely. We're very pleased to have this activity come up to strengthen our overall equity services that we have. As we mentioned, the teams are really very professional. The systems are very solid. And so that's basically what we are very pleased to onboard, and that's what we're having. And on top of that, as I mentioned, we will make sure that the clients are in line with our KYC.
How exposed are you to any further credit risk? Because we saw that the ECB actually asked several banks, including BNP, to communicate further about hedge funds exposure.
Yeah, but if you look at it in general, if it's the things, whatever you have on counterparties, you really have to look at those counterparties very well. And that is typically what we do. I'll give you an example. If you look at the cost of risk that we announced overall for the bank, which is basically going very down, which is at the same kind of levels of what we had in 2019. And this drop is only on what is called the stage 3. So really the names of the companies that have improved. So we didn't write anything back of the ex-ante provisionings that we've taken. So just to show you, the evolution of cost of risk is really a tribute to how it's managed.
Do you think there's an actual systemic risk to the European banking system with this hedge funds fallout?
Again, if you look at the overall system, and it's what you have, you can have on a counterparty, on a normal counterparty, you can have issues, yeah. And the thing what is important is that as a bank, or a system as the banks, you have to monitor very well that counterparty, the collateral that comes with it. And so that's basically it. So it's not a systemic issue.
Let's talk a little bit about the real economy and your domestic markets. If you look at the French retail banking revenues, they were down 2.9% in the first quarter. When do you expect these revenues to bounce back with the reopening of the economy that President Macron just announced?
Well, the thing is, if you look at our overall domestic markets, the revenues are evolving well. And so indeed what you see is in the retail parts, you see the volumes are up, and basically that is helping to fight the low interest rates. It's not an entire fight, but it fights it. And then we're also stepping up the fees, so the cross-selling that we are providing. So we really have it contain the impact. At the same time, you have the other domestic markets where there are really very strong activities happening. If you look at Arval or if you look at Consorsbank, their growth is double digit. And so that double digit is also basically going onto the clients that you see in the retail environment. So overall, if you look at our domestic markets, the overall handling of the revenues is basically up in the first quarter.
More broadly, can you give us any guidance on when you expect a real recovery in the real economy?
Yeah, our stance has always been that in what we see today in Europe, given that the vaccinations are ongoing, that probably around the third quarter of this year, there would be a balance. And that balance then will basically lead to a pickup that should be a sizable pickup, and it should be a sustainable pickup. So that's what we continue to see.
Are you worried that the French president is actually exiting the lockdown too soon?
Listen, that is yours to judge. What we do see is that it's basically the tapering off is being handled in phases. What we see at this stage in basically the many countries in Europe is that every confinement has been handled even in a better way. And so things look on track.
There's a lot of speculation still that a sale of the US business could be a good deal for BNP Paribas. What's your take on this?
No, the thing is, as you know, at Bank of the West, our activity, it's a very solid activity. In California, the activity is strong. We have strong management. The lady who's managing it, she's really shooting all the lights out when it comes to implementing the BNP Paribas approach. So all that is fine. And so we're very pleased with that. We continue to do that. The profitability is good. Now, of course, we see that there are elements of consolidation that we have observed. So we keep our eyes open, but we're very pleased with how the activities in California are developing.
One word on fossil fuel financing. There was a report saying that BNP Paribas was one of the only major banks which actually increased their support for fossil fuel financing last year. When do you expect to actually reduce this, or will you keep increasing this? And for example, could you tell us if you would help finance Total's project in Uganda?
Yeah, if you look in general, again, I'm not hinting or elaborating on counterparties, but if you look at the overall trend, what we want to do is we really are on the vanguard of helping this transition. That's what we're doing. We're really putting it front. Even I have a pin on it. Yeah? So that's basically what we aim to do. The thing is, in order to do this, you don't have a magical wand that basically changes from one to the other. So if we have sectors that are developing, we are accompanying them in their development. And this is not just wishful thinking. We help them. We make sure that there are targets on how to get there and how eventually to finance that transformation. So that's what we're doing. We are looking at a tangible trajectory to get evolutions done.
Does that mean that fossil fuel financing should keep increasing this year?
No, that's not what I said. What I said is that there has to be a trajectory for those companies to basically get out of it with clear milestones in the near future to come. And so that is what we basically work.
Final question. There was this video of this HSBC manager online talking about bankers' burnout recently. You probably saw. Could you tell us whether there's a concern at BNP Paribas and how you're managing at the moment these bankers' burnouts that may happen, especially in COVID times when it's been a difficult year for everyone?
Well, at BNP Paribas, one of the elements that is core is basically our bankers and our people. And so always we monitor their well-being constantly. It's not just now, we always do this. And that is what HR is doing. We're very monitoring that closely. We're making sure of how to, when there is work from home, not from home, how to embed it. So it's a continuous point of attention.
Will you keep your employees working from home for the rest of the year? Do you have any policy to come back to the office?
It depends country to country. So it depends what the overall authorities' regulations are. And so over time, things will evolve. I mean, we were in a work from home where you had like a couple of days work from home, and that will probably gravitate towards a couple of days in the office. But that is the phasing that depends on what the authorities in a certain environment are saying. But that's the trend that we see developing.
So you'll have like a hybrid system where some people can still work from home a few days a week. Do you have any numbers, proportion?
No, it's generic. That's what we're looking at. So we'll have to see if everything can be organized that way. But as I said, it's what we had in the past. People could work a couple of days from home to see how that works. And now it will probably be a couple of days in the office. But it depends a bit on activity. It depends a bit on the country, on our presence. So it's basically something that we will optimize.